Sup guys, your boy Quickstocks is back. I hope you're having a righteous day. So what's the move? Uncle Sam is giving everyone $1,200. Should we be purchasing TP or Activision Blizzard shares? Let's take a look. But first, remember to hit those thumbs up and give me some of that dopamine. So let's take a look at Activision Blizzard. Ticker symbol ATVI, trading for $58 a share as of March 30th. We've seen over a 25% correction in the overall market. And yet, what if I told you Activision Blizzard was only down 10% from its yearly highs seen in February? Well, it would be an accurate statement, but also kind of misleading, because as most companies set all-time highs in their share prices in February of 2020, Activision Blizzard actually saw its highs in September 2018, trading for $83 a share. With a combination of its failure at BlizzCon,
Android
killing the hopes and
iOS,
dreams of many
we don't
Diablo
have any
fans,
plans at the moment to do PC.
in the split between Activision and Bungie, the studio behind Destiny 2, and weak earnings. However, even with all of the doom and gloom, Blizzard still managed to rake in $7.5 billion in revenue for 2020, a record for the company with about $1.8 billion of it being profit. So what's the word? Is this stay-at-home trend the momentum that Activision Blizzard needs? Or is Activision Blizzard an aging company on its last wind? Let's take a look and see what we can expect from Activision Blizzard in 2020. It doesn't take a rocket scientist to come to the conclusion that with everyone being quarantined, we will see a spike in Activision Blizzard's daily active users in the next few quarters, along with Activision's Call of Duty Warzone being released as a free-to-play game on March 10th, which surpassed 15 million downloads in 3 days. Which is great for Activision, because this also means Call of Duty Esports League will be gaining momentum along with it. Another title seeing strong performance is World of Warcraft Classic, which had a significant increase in players due to prior and existing players who returned to the franchise. And of course, Season 3 of Overwatch League, which brought in 1.1 million active users in its Season 2 Overwatch Grand Finals. With Call of Duty and Overwatch League, Activision Blizzard's esports opportunity, in theory, could surpass professional American football in terms of scale in the long run, with the ability to attract a worldwide audience. So, how does esports generate revenue? Well, the main sources of revenue come from advertising, sponsorship, team sales, sales of media rights, merchandise, and tickets. Although esports is still just a sliver in Activision Blizzard's revenue, it's important to not overlook the sleeping Reinhardt, as many large companies are starting to understand the potential in esports, such as Anheuser-Busch, Coca-Cola, and State Farm, which were the top 3 sponsors of Overwatch League's second season. The league had a 30% increase year over year in total hours viewed during the first quarter, which is interesting because viewership for Overwatch League is going up while the number of players spending time in game has dipped, which either means a higher percentage of the existing player base is watching Overwatch League matches compared to last year, or the league is attracting new viewers who don't play Overwatch. It would be safe to assume both options are true. However, like I already stated, esports is just a mere fraction of Activision Blizzard's total revenue. So let's take a look. Monetizing games with add-on content is a key revenue driver for Activision Blizzard, which generated 58% of its revenue in the third quarter from digital in-game sales, which makes sense because Activision Blizzard is taking the approach of free-to-play smartphone games, which allows consumers to play games with no upfront cost, but offers players content through sale of DLC, which these digital revenue streams tend to be more recurring and have a higher profit margin, even though they may be highly unpopular from a consumer perspective. Another important driver that is often overlooked is King Digital Entertainment, which creates leading interactive entertainment for the mobile world with more than 200 titles, such as Candy Crush, Farm Heroes, Pet Rescue, and Bubble Witch. King Digital brought in over $2 billion in 2019, with around a $800 million operating income. And let's briefly list some of the titles under Activision Blizzard's umbrella so you understand how ingrained this company has been in your life. Call of Duty, Candy Crush, Farm Heroes, Hearthstone, Heroes of the Storm, Crash Bandicoot, Guitar Hero, King Digital, Skylanders, Warcraft, Starcraft, Overwatch, Spyro, Tony Hawk, and I'm going to stop here before I crash my CPU, but I think you get the point. However, Blizzard isn't the only player in the field, and it is still expensive compared to its peers such as Electronic Arts and Interactive Take-Two. Also important to note, a company I will be talking about soon, the Chinese company Tencent, the world's largest game owner, owns 5% of Blizzard. And just an FYI, they also own a significant share of Tesla, Snapchat, Riot Games, the people behind Fortnite, and so much more. So what's the word? Well, I do believe we will see Activision Blizzard well outperform the market for at least the first few quarters of 2020 and potentially for years to come. However, like I said, 58% of Activision Blizzard's revenue comes from in-game purchases. So if the overall economy is in the toilet, people are not going to have the spare money to buy loot boxes or cosmetics in a game. On the flip side, Blizzard only has $2.6 billion in debt as of June 2019 and $4.6 billion in cash, giving Activision Blizzard a nice safety net. However, with a PE of 30, that is still kind of rich for my liking in current economic times. However, I would not be surprised to see if Activision Blizzard back to the low 50s with current market volatility, which would make for a much more interesting scenario. Until then, there's just too many other great companies I'll be looking at investing in. Anyways, that's all I got for today. Hopefully y'all enjoyed the video. I'll catch you in the next one. Be sure to hit those thumbs. It really means a lot. Anyways, take care.